All right, ladies and gentlemen, welcome back. This is Coach JB here from the Simple Markets channel, and today we're going to be going over conservative versus aggressive trading styles using the Simple Markets trading strategy. We're going to talk about the advantages and the disadvantages of both. We're going to look at some trade examples from each side, and then we're going to go over a little bit of data from each. But I want to start here with the importance of this. So, conservative versus aggressive trading, both with the same exact trading strategy. A lot of people have this firm belief that you can get completely mechanical in your trading. And unfortunately, the truth is, unless you are using some form of algorithm or EA, you will never be able to get truly mechanical. There's always some form of discretion or even preference within that strategy. You can get I do believe the strategy we use is very close to fully mechanical and objective. Everybody learned liquidity sweeps from different places. Everybody learned break of structure from different places. Some people might have a different point of view of what a fair value gap is. At the end of the day, there is discretion that is involved with any type of manual trading like the strategy we use. But the most important part of that is that you want to take a strategy and mold it into something that fits your personal style, your psychology, and even your preferences in trading, compared to taking a strategy and trying to trade it the exact same way someone else does. So a good example of this is I travel a lot. By the time you're watching this video, I am probably in New York City with my girlfriend. We're going to be there for 4 days. We are then heading up to the White Mountains on the lake, and that is going to be in late June. In early July, we have back-to-back trips. We're going to be heading to Nashville from the 1st to the 7th, and then we're going to be going on a cruise to Bermuda from July 12th to July 19th, I believe. So letting you guys know a little bit of that there because my YouTube schedule might be a bit iffy in those time periods. I'm going to keep pumping out those Monday videos, hopefully, which is probably why you've noticed I'm scheduling a lot of these videos ahead recently to kind of cover that time period where my schedule might be a bit off. But nonetheless, it's going to be very different from some of you younger and hungrier traders out there who are looking to make as much capital and returns as you can, or trying to be a lot more aggressive, take more positions, get more action in the charts, compared to someone like me who I'm kind of stepping off the gas a little bit, letting myself be a bit more passive. I hop on one time per day for about 10 minutes. That alone is a lifestyle variance that of course is going to have to account based on the strategy you're using. I am not going to teach traders who are using my same strategy to not be hungry and to kind of let off the gas a little bit and be more passive. If they want those aggressive returns and aggressive gains, I'm going to enforce them to do so. The same thing when it comes to unregulated versus regulated brokers. I trade a very large account with a lot of capital, so I prefer a regulated broker because it is in a segregated fund, meaning my capital is a bit safer. If that firm were to go down, if my account got closed for any reason, my funds would be returned to me very quickly. Compared to a lot of my students, once again, they're trying to make their name, they're trying to make their income. They can start with smaller accounts, and I would recommend unregulated brokers to them so that they can risk higher, have greater leverage, scale that account quicker, although there is the risk of that account closing down and then their funds may not be returned to them. There is pros and cons in every situation, but every strategy or situation is not going to fit one single trader. So that is why we really enforce this idea of a spectrum among conservative and aggressive traders within our community. With the context out of the way here, we're going to look at this trade, which I took on AUD/NZD, and this was just simply a buy position following that overall bullish trend. We have the break of structure, the fair value gap, the sweep on liquidity here. I waited for price to tap in. We got a reaction from there, and then we ran through and eventually got break even. I lost no capital on this trade. This would be considered a more conservative trade compared to some of my students and what they actually took. So some of them, instead of taking this overall buy position that we're looking at here, I'll clear that up off the charts, they focused on that most recent break of structure right here with a good fair value gap, a sweep on liquidity, and they actually took this sell position and it was a winning sell position. This is a lot more aggressive than the style that I typically take, even for someone like myself who only hops on at around 9 a.m. You could see by the time I even got on the charts at 9 a.m. here, this trade would have already been tapped into. I wouldn't have even been able to place this order in time because it's such a small range and very aggressive. But that's a short and sweet example of a conservative versus aggressive approach on the same pair. But we're going to head to the equity simulator now to talk a little bit about the pros and cons of it. You guys know I don't even trade with FTMO, but I love this tool. I come back to it all the time. We're going to start with $100,000 in simulated capital here. We're going to look at my journal here for the full year of 2025, and my win rate was 38.53%. So we're going to go ahead and actually plug that in here. I don't know if you can do decimals in this. Let's see. Okay, so it does round it up to 39%. We have a fixed 3 risk to reward, as many of you know. We will do one line for simplicity, and then we will take the amount of trades I took, which is 168 minus 4, because it doesn't start till the 4th page on the journal here, because it doesn't start until the 4th row in the journal. So 164 trades, 164. Risk percentage, I risk 2%. We're going to do 1% here to keep it unison, and then run. So you could see this is a general equity curve with the results I just plugged into it. I basically just took my data from 2025 and plugged it in. My max drawdown here is 5%. That's a key one we want to look at. My win rate was 38%, which is really strong. It rounded up to 39 here, so we'll call it 39%. My max consecutive losers was only 8 here, and my average max drawdown was 5.13. And as you can see here, we brought the account from about 103,000 all the way up to 200,000. This is actually really solid data based on the metrics plugged in, but this would be considered a more conservative approach. 164 trades here, 39% win rate. Now we have some data here from a student of ours. His win rate was about 34.8. We'll plug in 35 into the calculator. Of course, the average 3RR. And then more importantly here, 519 total trades, which is significantly more than I plugged in. So we're going to plug in that value of 519 trades. We said 35% win rate here, 3R with 1% risk, and we will run it. So now, as you notice, there's a very big difference here. Now the max drawdown is nearly 15%, but you'll notice instead of doubling the account, we nearly tripled it in the same amount of time. My trading was over the course of 1 year. His trading data was over the course of 1 year, but he nearly tripled his account while I doubled mine. The only difference here is that his drawdown and his max consecutive losing streak is going to be significantly higher. This is the advantage and disadvantages of aggressive versus conservative trading. If you are trading more conservative, you are going to take less trades overall, but your win rate is expected to be slightly higher because you're taking less trades, which means typically you might have a stronger criteria. For example, the trade that I showed, I tend to follow trend pretty heavily. I like to see the bullish trend here and take the bullish trade. Someone who is trading more aggressive might not care about trend. They're willing to take that short position because it's right there in front of them. Regardless of what price is doing on that higher time frame, that minute detail or shift in criteria is enough to lower the win rate slightly, but keep those repetitions extremely high so you'll make more returns in the longer run. Now, what does this mean for you? If you are someone who can withstand deeper drawdown periods and not get too flustered, I really do recommend something like aggressive trading. You like the action, you want that higher return in profit over time, and you understand the probabilities that yes, you will experience deeper drawdown because of that. If you are that type of trader, I recommend an aggressive stance in using our strategy, and you could even send me sheets of data and I'll take a look at it and see what I think works best for you. I've coached many students at this point. I've looked at many different stances of aggressive versus conservative, and honestly, it is a spectrum as well. Some people are extremely conservative, some are extremely aggressive. All along that spectrum, we have funded traders who are trading their own preference and style. That is the most important part of all of this, is you are looking for your own style and preference because any of them work, which is the most important key aspect of this. You do not have to trade the strategy and take the same trades as me to be profitable. You do not have to be extremely aggressive and take every single trade and be hyper mechanical to be profitable. Both of those will work, but more importantly, you need to choose what is going to work for you. We talked about the aggressive stance. Now, a more conservative stance like myself, some of the advantages to it. Your win rate will typically be a little bit higher, which means your drawdown periods will be a little bit more mitigated. My deepest drawdown streak in 2025 was 7 consecutive losses. Compared to what we're seeing here with the aggressive approach, we're looking at closer to 15 consecutive losses. So definitely a very large difference there. You can also see that I am at 164 trades in the year compared to 519. Anywhere within there is technically a spectrum. I know this student is very aggressive with 519, one of the more aggressive approaches I've seen, and then I am probably the most conservative approach compared to my community, just based on the things we talked about earlier. My lifestyle, my traveling, even my schedule day by day. I only hop on the charts one time. So once again, understanding that I am expected to make less returns than my student who might be extremely aggressive. That is part of the reason why you will notice I risk 2% per trade, is because I understand with my more conservative approach, I'm expected to make less risk and reward, which means I can risk a little bit higher. I have more margin to work with as well, which is really nice. If I have 10 pending orders at once, I wouldn't be able to risk 2% per trade, but the fact that I trade very conservatively and maybe only have 3 to 5 at once, my margin allows me to place that even with my 1 to 30 regulated leverage. Compared to a trader who is trading very aggressive with 500 trades per year, he would not be able to risk 2% with 1 to 30 leverage on a regulated broker. He would very likely have to go with an unregulated broker or even drop his risk closer to 0.5 to 1%. Nonetheless, those are some of the advantages and disadvantages of trading aggressive or conservative. I really recommend finding your own style because that is what is going to fit you best and make you more consistent in the long run. Hopefully that debunks some of the myths here that our strategy and all of our traders trade the exact same way. I know I've shown this before, but we're going to show it again here. I basically asked on February 19th, for example, how much RR have you gained for this year and how many trades? And as you can see, one after another, extremely profitable. 11 RR, 15 RR, another 15 R, 9, 16. Started this year around 20 of January, and he's up 19 R for the month, 18 R, 12 R. All of these traders are up, different RR for the month, and all of them are profitable. But you could see 40 trades versus 16, versus 32, versus 108, an extremely aggressive approach here. 33, 88, another very aggressive approach. SK up 21 R. So the reason I show this is for you guys to understand that we have a wide spectrum of traders all using the same exact strategy in a more conservative or aggressive manner, but all of them are able to achieve profitability based on finding their own preference and style and really working on it to improve. Thank you everyone for watching the video. I hope it cleared up some topics for you and hopefully you understand a more conservative versus a more aggressive approach using the same strategy. If you have any questions, drop them in the comments down below. I answer every single comment, and I hope to see you guys in next Monday's video.